All right, it looks like we are slowing down on attendees coming in, so hopefully that means everyone's getting in and getting settled. Thank you so much for joining us today. We are going to dive into the wide world of financial trends for the community associations and what's going on in 2025. We have our very own expert joining us, which most of you have attended in the past to know Vishnu very well. He is presenting today. Vishnu is our Vice President of Financial Services here at Enumerate. He's also the past president of the South Florida CIA and South Florida chapter. I think I got that right. Yes, CIA National. I'm sorry. And then not only is he a CPA, but he is a CFE, which makes him the 007 of accounting. He is a certified fraud examiner as well as a certified public accountant. Vishnu is gracious enough to do our budgeting webinar, which you've probably seen. He also does a lot of our other financial webinars getting ready for year-end close. And he's one of the best presenters we have, and everyone seems to like him so much. So without further ado, Vishnu, would you like to say hello to everybody?
Hey, good afternoon, everybody. Thanks so much for joining us, or good morning, depending if you're on the West Coast.
Vishnu has a packed, so I hope you guys are ready, packed deck today to go over about what's going on in the industry. He also presents this throughout the country and probably throughout the world because he's a global traveler. What we're going to dive into a little bit today, you can see on the agenda, is about our financial services here that he heads up, which is we call it EFS, Enumerate Financial Services. And then he's going to jump into some trends going on in the industry and legislation, also insurance costs, and then creating your best community. And so with that, we'll go ahead and jump up to the next slide. So we mentioned he heads up EFS. He's the VP of our financial services. So many of you know, and a lot of you are customers, what is our Enumerate Financial Services? Well, we offer full service bookkeeping and accounting for HOAs, condos, and property management companies. And so what that entails is what you see on your screen, all kinds of day-to-day bookkeeping, accounting, financial consulting, everything from budget planning into overall financial management. They are a suite of team of several different, I think 50 different CPAs, bookkeepers, accountants, probably more than that, Vishnu, because you've been growing, and based out of both Florida and California. And so this is a service that we offer our customers, and that really helps them keep their books in order as well as to grow and to scale their business. So Vishnu, let's go ahead and get started today.
Hey, thanks so much. So we're going to start off with this. I always like to start off with an overview of the community association industry, because this industry is growing so fast. I think everybody needs to just kind of keep track of this rapid growth and what the size is. 30% of the US population actually lives in a community association, whether you call it a cooperative or a homeowner association or a condominium or a POA or a maintenance or assessment organization. There's a dozen different names, or, you know, depending on what part of the country you're in, but it all still means people living together in community association living, where they're sharing expenses between them, and there is an organization set up to manage the common area for them. I'm not going to read every number on here, but just some of the things to highlight: $108 billion in assessments collected from homeowners, $27 billion set aside in reserve, and that reserve number is a dated number, in that with the new laws that have been put in place that we're talking about in this presentation, that number is going to climb dramatically from $27 million northward. 60 to 65,000 community association managers across this country. Something to keep in mind as you look at this industry and actively are part of this industry. Next. 30–40% of the community associations are self-managed, meaning they're using professional assistance for specific projects and such. 105 to 110,000 employees are individuals are employed by management companies. It is a huge part of the economy, community associations, and I think everybody just needs to understand the amount of dollars that are flowing through this industry. And just a quick promo shout out for Community Association Institute. If you have not joined, if you are not a member, you are doing yourself a disservice. Community Association Institute have really been involved for about 20 years now. Tremendous resource within this industry. The slides that I'm providing, this data comes from their foundation. They have a research foundation that publishes a tremendous amount of information. Most of that information is available to everyone, whether or not you're a member. There is tremendously more that's available to you as a member of CAI. So if you're not actively a member, join one of the 63 chapters across the country and become one of the 49,000 members of CAI that benefit greatly from participation. Next slide. Community associations by state. So there's some 365,000 community associations across this US, but what you notice about this industry is it is not equal across the country. There are a number of states that have little to none as far as community associations, whereas you have the two granddaddies of the country, which are Florida and California, and they run about neck and neck, 50,000 community associations in each of those two states. So by far, well over a third or close to a third of the industry is concentrated in two particular states, California and Florida. CAI has about 8 chapters in each of those two states, lobbying efforts and everything in those states as well. And then there's a significant drop off by the time you get to Texas and Illinois, and then there's an even further drop off by the time you get out of the top 10.
Vishnu, that makes sense why you have your hubs in California and Florida then, huh?
Absolutely. That's why we, well, on a coast-to-coast basis, we can cover the entire country by being on East Coast and West Coast, but yes, the two most populous states by community associations for the markets we serve, sure.
And then one thing to call out, you said 30 to 40% are self-managed, right? Associations?
Yep.
So isn't that, so one of your perfect customers are a lot of customers that you serve with EFS are what we call SMA or self-managed associations, right?
And that's kind of that same market where there you have professional management companies that are the majority of associations are using a professional management company, and then there's a number that will use a licensed CAM, a licensed manager. Depending on the state by state licensing requirements differ. The state of Florida, for example, you're required to be. There's some states that do not require a specific license to be community association manager, which is where organizations like CAI come in handy, because it allows boards the opportunity to have a manager that has some level of certification behind them, so they realize that they're industry well trained.
That's right. And so that's complementary for what you offer from accounting and bookkeeping to those same size self-managed associations, right? That's why they would reach out to you, because they need that as well.
Sure. Okay. Yeah. Next slide. Okay, go ahead. So as we talk about aging buildings, everybody remembers Surfside. It's a topic of conversation. It's been in the news ad infinitum, rightfully so, for about the last 4 years of consciousness, 3 years, I guess, 4 years of consciousness now since the collapse of Surfside Tower in Sunny Isles, or Surfside. With that building's collapse, it changed the laws of Florida, and has changed the laws in a number of other states across the US. But one thing it did call out was the number of buildings that are old and that need significant remodeling. In Southeast Florida, where we're located, there's some 10,000 plus community associations. Dade and Broward, which is Fort Lauderdale and Miami area, there was a study that was done that said about 2/3 of the buildings, of the high-rise condominiums in this part of the world, are over 40 years of age. And it's really just gets scary when they're that old and they haven't been maintained well. This map just gives you a quick heat map of buildings that have been constructed prior to 1999. So these buildings are going to be 25 years and older at this particular point. Obviously, California, Florida is number 1. California is number 2. New York is right up there as well. So next. Just another way of looking at the same data as far as the date in which these buildings, the number of community associations that were built in 1960 to 1979 that are now 40 years plus, which is a lot of what we serve down here in Southeast Florida. Very, very much older buildings. What you're finding also is there's something called a gentrification that's going on, where you're finding two things. One, buildings being bought out, and that's one of the major trends that's starting to creep in here. It's been something, if you live in New York or New Jersey, something you've seen going on for decades, where older buildings get torn down and new buildings get put up, and you're tearing down buildings at X square foot and you're putting up new buildings at multiples of that. What we're seeing here in Florida is you're seeing condo towers get taken out at $400, $500, $600 a square foot, and you're seeing towers put up at $2,000, $3,000, $4,000, $5,000 a square foot. There is a tower that's going up right now in South Florida, in Miami, that is $7,000 a square foot.
Wow.
And it is an astounding number. It was one thing when that delta was $400 a square foot to $1,600 or $2,000 a square foot. But to now have buildings that are going up north of $4,000 and $5,000 a square foot, it's the high-end luxury market that Miami's becoming. But they're taking out the older buildings that are now looking to sell because of the financial pressures that are being put on those buildings. You're seeing California right now, that with the wildfires and the destruction that's gone on out there, there is complete redesign of communities. Colorado faced this with the fires that they had 3 or 4 years ago, where entire communities were wiped out by the fires. And the question comes in now that you're reconstructing neighborhoods that were predominantly one or the other are now being completely remodeled, are either becoming community housing, or if they are single family homes, the price point on those homes are becoming significantly greater. And then government is stepping in. Colorado is passing a law, or looking to pass a law, that is going to require a change in the ventilation system of housing. And that change in the ventilation system of housing, they're saying if those houses in California, there was a great story on CBS Sunday morning, if anybody may have seen it, that talked about a ventilation system, and they showed you this neighborhood in California, and every house was wiped out. One single house was standing. They had changed their ventilation system in that, where it is not a passive system, it is an active system that controls the flow of air into the house. What they're saying is that with fires and these wildfires that occur, the embers come from outside and are sucked in through the air vent. That's why if you ever notice on these fires in California, the fires are burning from within, coming out of the house. It is not on top of the house going in. And that's the nuance of this. So this house, for example, was saved. There's a push in certain parts of this country that are in fire zones to now have this. It adds about 7 to 10% to the cost of rebuilding a house. So cost is a factor, but there again, it's unless government puts it in place, I don't know how many owners are actually going to take it. Next slide. The building inspection laws and legislation from around the country, CAI, for example, following Surfside, I was on a task force nationally with brilliant minds on the reserve study guidelines of what should be the standard in the country for establishing reserve study policies by state. Some states, New Jersey, Maryland, Virginia, and others, actively looked at the legislation that was being, the language that was being proposed by CAI, and used it as advisement, if not incorporating it into legislation that was being proposed in those states. Some have passed and become law. Others are still out there being considered. Florida, one of the most aggressive in the country in the law that was passed, both to mandate reserve studies and mandate the funding of reserves. Next. So the entire concept of condominium reserve studies and funding, this is just some highlights of the activity that's gone on around the country so far in the last 2 years since Surfside, and what's actively pursuing. We all know Florida. If anybody hasn't been reading what's going on in Florida, Florida passed a condo reserve study law and a condo safety law in 2022, leading the nation to both mandate a reserve study, mandate funding of structural integrity reserves on condominium buildings 3 stories and higher. Other states have gone to different degrees. So Connecticut, Hawaii, Maryland, New Jersey, Tennessee introduced legislation. Hawaii passed that legislation. Tennessee passed legislation mandating reserve studies for condominium associations. It is very active out there. Now, the building maintenance and structural integrity, keeping in mind a reserve study, to just have a reserve study is one thing. To then turn around and take that reserve study and require either a structural integrity study, which is a higher level, or a different degree, where the state in, for example, Florida has defined 8 components as being integral to maintaining the structure of your building, from the foundation to your roof, to the exterior walls, to the window, etc. Those are essential to keeping your building standing. So Florida said these need to be set aside, and you must mandatorily fund starting January 1st, 2025, with some caveats or exceptions. And that law went into effect January 1st, and it has drastically and dramatically changed the landscape in Florida. We have 4 associations with better than $50 million special assessments. We have over half of our clients in Florida that have an active special assessment. These special assessments are anywhere from $15,000 to $300,000 per owner.
Wow.
Some of them are being collected in 12 months. Some of them are being collected over 10 years. It really just depends on the association that's out there, because the other thing you see in this market is you have associations that are 150, 170 units with multi-million-dollar special assessments, and you have associations with 1,000 units with multi-million dollars. So yes, having more units helps, but we have an association with 4 buildings over 1,000 units that is facing $30,000 to $60,000 per owner special assessment. That is on top of a similar special assessment they had 5 years ago. And this is to complete the work on the first one and additional scope of work that's needed to be performed. And that's really upended this market in the state of Florida for community associations, condos in specific, because this law applies to condominiums, not homeowner associations. So one of the trends in 2025 that is a huge trend, starting in Florida, but California's impacted, Colorado's impacted, the Carolinas are impacted. It's not just a Florida phenomenon, is the impact of having reserve studies done, mandatory funding of reserves, or some level of that, bringing buildings up to a standard code of repair, and what that is doing to the owners that have lived there. That concept of gentrification that I mentioned earlier pits people who have been living in a building for 30 or 40 years that might have paid off their mortgage, living on a fixed income, versus people who have bought in within the last 3 to 5 years and have the money and would like to fix that building up and bring it up to a certain level or standard that they would like. Anything that you do puts pressure on the first person. The second person wants the new lounge or the new foyer, wants the upgraded facilities and equipment that go on to the standard of living they'd like. The people that have been living for 30 or 40 years on fixed income have very little capacity, if any, and then are going to be forced out of where they live, and they're going to have to downsize. They're going to have to move to someplace else. When you add that to the fact that the mortgage rates are now over 7% across the US, the number of buyers out there is also very challenging. The number of homes that sold in 2024, one of the lowest in a number of years, because of this confluence of high interest rates, questions about community associations, condos in particular, and the condition they're in, because people are selling their condo at a discounted price and then having to decide how they're going to pay off that tens of thousands of dollars special assessment at the same time. Next. Corporate Transparency Act. Figured I'd throw in a slide on this. This is the what day of the week is it as to what does the law look like today? Because it's been so, yeah, Adam, there's been so many back and forth on this in the last month alone. there was a push. CAI filed a lawsuit, as did others. There was a lawsuit that was finally accepted, and an injunction was granted. And then the Court of Appeals rejected it, and then another panel within the same Court of Appeals upheld it. And that's where we stand today. So as of today, the Corporate Transparency Act is on hold. You are not mandatorily required to file. You are voluntarily encouraged by FinCEN and the US Treasury Department to go ahead and file. Just to bring everybody up to speed, because I really did kind of start halfway into the conversation. For anybody who doesn't know what the Corporate Transparency Act is, it is a law that was passed a few years back by Congress, and it mandates that all corporations within the United States that are registered for the most part in their state as a corporation are required to file with FinCEN, which is the Financial Crimes Division of the United States Treasury Department. And FinCEN has had this requirement. It covers condominium associations, HOAs, all community association types, just because of the wording of the way this is worded. So small businesses, mom and pop businesses, everybody gets swept up in this. So it's not for major corporations, it's every corporation for the most part that files or registers with their state. What happens now is you were supposed to register come January 1, that was the deadline. You were supposed to go online to FinCEN and fill out information, passport, driver's license, all your personal information, Social Security, etc., and indicate that you are a board member of X association. And you were supposed to require and do that by January 1. With the current temporary stay of that law, I think everybody's waiting to see what happens next, because the court has not moved on it. It is still sitting pending, and there's a question of whether the new Trump administration will step in and kill this, whether the Treasury Department under new leadership changes this. Everybody's on a sit and wait right now to see what happens next. But just to be clear, you're not required to. If you have any questions, I strongly recommend you get with legal counsel in your respective state and just have them guide you through any of this. Okay, next. Insurance trends, and not that I haven't said it at the beginning, but just to make sure we're really super clear. I am a CPA and I am not an attorney, so I'm not offering legal advice at all in this either thing. I'm just simply giving you some trends of what we're seeing. We're going to go through some of these things, and not even giving you tax advice because not my area of expertise. I play in the community association accounting space solely. The insurance crisis. There again, if you live in California, Colorado, the Carolinas, Florida, you are well aware of the insurance crisis that's been going on for about 3 years right now. Florida, we've seen our insurance rates rise 300% in the last 2 or 3 years. We have associations that saw a doubling of insurance year over year for 2 or 3 years consecutively. Associations that were paying $700,000 for a high-rise condo annually for their insurance are suddenly paying $2.1 million for that same insurance policy within 24 months. There is challenges on coverages for anybody who is in California or has been reading of what's going on in California. You have insurance carriers that are not only getting out of the state as fast as they can, which is what happened to Florida after the last series of storms. You also have in California where they are in the middle of the storm, of the fire, the fires are canceling policies. And there's a huge pushback. The government's going to get involved, hopefully, and figure that out to protect those owners. You know, I think when you talk about acts that do not endear the insurance industry to anyone, yeah, that would be trying to cancel somebody's policy as their house is burning down.
I think I saw something where the government already stepped in and put like a moratorium on them yanking policies out in California. So hopefully that is happening, because I agree with you, Vishnu. Yeah, that's awful.
Yeah, it's been really crazy what's going on across the state, across the country on these issues. The 3 slides I have for you on the insurance crisis. This first one, and these are from Harvard study that was done. And what it's showing you is it shows the homeowner insurance prices and how they've increased greater than the value of the housing prices. We've seen an increase in housing value, which has been helpful to offset some of this, but not enough. We've gotten to an inflection point where the insurance costs are just rising faster. Next. And this is the shifting of liability. In the state of Florida, for example, after the 2004-2005 hurricane season, where we had 8 named storms hit the state of Florida had to create what they call, in this slide, a fair access plan, which means basically the state is creating their own insurance fund and they're self-funding it. So we have citizens insurance in the state of Florida, but California, Louisiana, other states across this US have these type of plans they've had to create where they become the insurer of last resort. As the insurer of last resort, Citizens has gone through the roof where they are now over 1 million policies. They're about 1.3 million in policies and one of the largest insurance carriers in the state of Florida by the number of policies that they are insuring, and they are trying everything they can to get out from underneath that. There's a new law that has allowed them to pass off their insurance policies to any insurance carrier who will take them, even though the increase in premium could be up to 20%. They can force off their insureds to another company, and that insured is going to face potentially up to 20% increase in the premium, just so they can reduce the burden on what the state of Florida is now holding. This chart, which is astounding, just shows the exposure that now these fair plans across the US are topping $1 trillion in the amount that they are insuring. So it's astounding the amount of money that states are now having to go to, and it is the states that face some of the greatest natural disasters that we see every single year. And it's not like it's a one and done. Florida's always going to be in the higher eye of the hurricane. California is always going to face the fire, the forest fires, and then after forest fires are done, they face the floods and they face the landslides because it's burnt all the vegetation. So things come rolling downhill, or you get a severe rainstorm and it just brings everything down on top of the houses that didn't get burnt. So it's just continuous, and whether you believe in global warming, you don't, political all aside, the world's changing as far as it comes to climate. We're seeing hurricanes spin up in the Gulf in 48 hours from a Category 1 to a Category 5 and come ashore at 150 miles an hour. So what used to take 5, 7, 10 days to develop coming across the Atlantic spins up now in the Gulf of Mexico, and within 48 hours, it's going to hit you as a Category 5, and there's very little time to prepare. Underinsuring, let's go to the next slide. Underinsuring is another major issue in this country, where owners are not insuring either to the full value of replacement cost, or they're not even taking out insurance coverage at all because they're deeming the coverage to be too expensive. So what's happening is flood insurance, which is probably the biggest target out there. Let's use the word target. In Florida, 80% of the homes in Florida do not carry flood insurance. It has to sink in. We're Florida. We have 6 months of hurricane season from June 1st to November 30th. Flood is defined as any rising water that comes into a house. So your canal overflows, you get storm surge from the ocean. It doesn't matter there's a 150-mile-an-hour hurricane that drove that storm surge into your house. It's rising water. Rising water comes into your building. That's flood. And
we're also surrounded by the ocean on all sides, right? So correct. You would think.
Yeah, we have in Central Florida. We have so many lakes in Central Florida. But yeah, so that's the challenge here: is the underinsured. So while you look at the storms that hit late last season, and you're saying $300-400 billion worth of damage, the insured amount of that $300-400 billion of damage considerably less. as to what the insurance carriers are going to be responsible for. We are seeing some abatement in Florida on the severe insurance premiums. It's because the insurance carriers have been able to raise their premiums so high. They've been able to set aside large reserves, and these storms that are coming ashore, even though they are dramatic and dynamic and causing incredible amounts of damage, if you don't have the right level of coverage or sufficient coverage, they're not on the hook for helping you replace, which means it's going to be a loss, and you're hoping FEMA might bail you out with some money, but otherwise the insurance carriers are not, so they're not recognizing the full value of that loss, which means they're able to then only offer moderate increases in premiums of 10 or 15 or 20%. And I say moderate tongue-in-cheek because 10, 15% is a huge increase, but compared to the 50, 80, 100% increases we've seen over the last 2 or 3 years, it's moderate. All right. Okay, next. Okay, community association like technology and communication. So here's a couple of slides from surveys that CAI did of their communities. CAI, just as a breakout, has about 49,000 members across the US, and that's broken into 3 categories. Community association leaders, which are the volunteer leaders that man the boards, tireless work, thankless, because they're doing all that work and they do it at no cost to anyone, volunteer, and they're the first person to take a hit, because when anything goes wrong in an association, it's always blame the board, unfortunately. So, you know, thank you to service for everybody on the volunteer boards out there that, you know, do that for the benefit of their community. The managers, toughest jobs out there in any industry. Nobody comes to you just to say hello and hope you're having a great day. They only come to you when things are going wrong and they're upset, and you guys have to take it. And you have 1,000 bosses, because everybody comes to you and reminds you that they pay their maintenance, and their maintenance pays your bill, your pay. So tough job for them. That's another management group. And then the business partners, which are the vendors that work in this industry, and they make up those 3 groups. So when these surveys go out, depending on the survey type, it dictates the respondents that come back. But one of the questions that was asked about electronic method, it's 2025. Every board that I have would love to be able to mandatorily require that their owners pay via ACH, and that's the only way they could pay, because they guarantee they're going to get all their money and not have to run down people for late letters and collection action because they're not paying on time. But unfortunately, you can't do that. So you have to offer every method possible. So you offer ACH recurring, ACH one time. You offer a lockbox, hopefully, where they can send their payment directly to the bank. They can use their bill pay to send out. They can write a physical check, and depending on the bank that you use, they may be even able to take that coupon and check if they want, old school, and go to the bank and drop it off. But it's digital. We're trying to get the world to move to digital payments, and there's such massive economies of scale that bring the cost down for community associations, because it reduces the cost of paper, which is friction. So if we can do electronic payments online, where one bank electronically pays another bank, and there's no paper being processed, and one computer system is talking to another computer system, that's the trend. That's a trend for 24. It's going to continue and get even deeper in 2025 as we see greater penetration into the digital payment market. Every major player in the industry is pushing digital payments and trying to increase adoption into digital payments. Okay, next. So part of that is getting owners to operate online. How can we get owners to operate online, whether they're going to use a app on their phone, or they're going to log in online on the bank's website, on the association's website, and make their payment or process requests. If you have a package pickup, do you have a system that allows you to let your owner know electronically there's a package to be picked up? Do you have an Amazon locker that allows them to go straight to the locker and pick it up without you having to interact with a human being? It speeds up the throughput. There are security systems that have been in place for community associations that have a virtual guard that will allow you to put in your driver's license and then allow you access, that you don't need a physical body anymore. So all of these things, by going, AI hasn't even touched this industry in a real way. We're rolling out, for example, a digital assistant that will help owners via text to be able to find out their balances, get a copy of their ledger. These are some of the features that have been available and are now becoming more readily available and seeking adoption from associations and owners out there. And as that comfort level grows with owners in using these digital devices in this space, everybody's very accustomed to using their phone. Everybody's very much accustomed to using their computer. It's getting them to now adopt and adapt that to this industry. And as that adoption grows, that would be a great cost saver for community associations.
Okay. And Vishnu, I'd be remiss if I don't mention that our resident engagement platform, Engage, does a lot of this for our customers, and it connects directly into our central platform, and it does have a mobile application that allows our homeowners to interact directly through their mobile phone. So we're seeing that trend is picking up too, and it's definitely saved time, money, and resources while we're running communities.
Great, thanks for that. Next slide. Yeah. Communications. Just call out on communications and the way we communicate with our owners. So there is the traditional snail mail where you send out your budget notices, your annual election notices, etc., and it's all done by U.S. mail, which the U.S. Postal Service, I don't think that I need to say anything to anybody about the state of disrepair of the United States Postal Service, where it takes weeks to get letters out just across the country, get payments from owners to banks. It can take 7 to 10 business days, depending. Certain parts of the country have cut back mail service. The U.S. Postal Service cut back to 5 days a week rather than 7. All of these things come together to impact that. So anything that can be done to drive electronic adoption, in this particular case, talking about adoption of notices, that where you're emailing or you're even text blasting owners about things that are going on in the building. The elevator is going to be shut down. There's an emergency that everybody needs to be aware. The water is going to be shut down because you're working on the chillers or the coolers on the air conditioning system in the tower. Those things need to be communicated. There's systems already in place that allow you to do that, to notify owners. However, most of your states that are out there still require legal notification to owners to be by U.S. mail. So there's 2 call outs on this. One, the need to get with legislatures to pass legislation that allow legal notification to be done in alternate forms. And even when, for example, in the state of Florida, it is allowed to be in an alternate form, it has to be adopted. And there's a protocol where the association's board has to notify owners that they plan to do this. And there's a very strict protocol that has to be followed in how it gets done and how it gets adopted. And legal counsel is your guide to that. So make sure that if you are in a state that doesn't allow that, get with your CAI chapter, get with any other organization, get with your legislators to make sure that you're trying to fight to get that added as a right for electronic communication in your state. On top of that, if you are in a state where you have this, you need to be working to make sure that you are working with your owners and your legal counsel to adopt a plan by which you can do that, because the cost of a mailer alone for an annual election can be thousands of dollars depending on the size of your community. The notice of your annual budget meeting, sending out annual coupon books. Whereas if you have a software system that allows you to send out electronic email notices with a push of a button, or send out statements or invoices with a push of a button to all the owners, and all your owners are signed up, it takes away thousands of dollars of cost every year from your association. Okay. Next. Okay, supporting mental health and loneliness. So these are just a couple of trends. I just want to make sure that, you know, I don't think this is anything new. I think this is something that's going on out there for the last few years, and it's been called out. So If we go back one. Oh, sorry, you're fine.
Cha.
Yeah, so it's yeah, I just the order of the slides on the loneliness. The Surgeon General put out this study on loneliness, calling out loneliness, and it was 2023 study that he did. It is valuable for everybody to read. I think it's common sense. It isn't magical of what it's saying, right? We are a social being and we need people. What happens in community associations in today's world, where we live on computers and electronic devices, we become isolated and we fail to communicate, and people get shut in. I had an association where the treasurer, who was a lovely person, lived by herself. She passed away, and it was 3 days before somebody realized that she had passed away, and her daughter, who lived out of state, called the association for a wellness check, and the association went upstairs to do a wellness check. If your building or community does not have wellness checks, you need to institute wellness checks, where somebody who is taking care of or responsible for somebody who may be elder in your community can call the management office, and somebody will go check on somebody for you. That is an essential. Doing community events that brings out the community or brings the community together on a monthly basis or regular basis, those are vital to today's world within community associations. We are a community, and I think we need to make sure we remember that. This particular one is harmonious blend of work, life. We all overdo it in American society, where we work way more hours than we are off. And with our electronic devices, if you have your work email attached to your phone, or clients will text you, or if you're a board member and you're getting communication from owners nights and weekends, managers get calls nights and weekends, and you're responding to these things, the more of this stuff that you do, you have to figure out how you make that balance. Work a 10-hour workday if you want, but when you go home, and separate one from the other. We all need that downtime to recharge. If we don't, we're going to get burnt out, which is what happens way too often. Next.
Oh, sure, Vishnu, I agree. Like, I think really since COVID, the whole self-care, isolation, loneliness has just like skyrocketed. So that's coming up in trends for the last few years. Last year, one of the largest trends in the communities was apathy. And so getting the communities to connect to one another, to interact, and also wellness checks, like you just said. So that's been a huge trend. I mean, I know sometimes we say that's kind of fuzzy or, warm and fuzzy feelings, but it's a real thing now based on a community or society that runs heavily on technology. So I think that's going to become even more important as we go forward. So thank you for all that. And thank you for presenting today. It was a jam-packed session. So we can open up to some questions if we have questions. But before we do that, I just want to make sure, so Vishnu once again heads up our financial services, is VP of Financial Services, CPA, CFE, and some of the services that they offer we saw. If you need some help with your bookkeeping and accounting for your community, feel free to give us an email or a call. You can reach us at sales@goenumerate.com, and we can get you set up to learn all what Vishnu and his team of very talented and qualified CPAs, accountants, and bookkeepers can do for you to help run your operations smoothly. So let me just check and see if we have any questions for you. They look like they're a little quiet today, just one so far. So Vishnu, for the reserve studies, are they time bound or time limited?
So it depends on the state, and you have to check with your state. So in Florida, for example, the requirement's every 10 years. So the new condo law requires a reserve study every 10 years. But different states will have different requirements. You just need to make sure whatever state you're in, you're checking with your legal counsel or your management company, whatever it is, as to what the requirement is.
Okay. Kind of an interesting philosophical question on insurance rates and cost versus the property value. So if the insurance costs to, I'm going to restate this. If the insurance costs are continue to going up over the property value, what is going to be done? Like, do you feel like they're going to be regulated, something's going to come into play, because when you mentioned it, the states are taking on a lot of this burden, and now they're having to find some way to push it somewhere else. So what, in your mind, do you think will happen?
So every state's going to be different in the way they're attacking this, and there's a number of different states that are doing different things. So Florida, for example, there was in legislation that's been passed in the last 2 years, they've brought about a number of reforms to insurance. For example, just a couple quick ones. In the state of Florida, it used to be that if your roof was 25% or greater damaged, the state required you to replace the entire roof. Well, that is a tremendous cost, because now the insurer has to insure for replacement of roofs at that low a percentage of damage. Now what they did is they raised that to 50%. So it reduces dramatically the number of roofs that would need to be replaced versus repaired, which would directly lower the cost of insuring those roofs, because the liability taken on by the insurance carrier is going to be smaller. Litigation is another major issue within the insurance world. Florida represented 9 or 10% of all insurance policies written in the country, but we represented something like 78% of all litigation. Wow. And this is a stat from about 2 years ago, Governor DeSantis had put out there. And what they did is the state of Florida tightened up regulations around who could bring a lawsuit, how much time you have in order to bring a lawsuit, etc. And that's, we've seen working itself through. It takes a couple years because the existing cases wouldn't be affected, but anything new would be affected. So if we could slow down the amount of litigation that comes in, you know, that helps as well. So double-sided sword, because you have to now be prepared that if you do have true legitimate damage, you have to recognize it timely and you have to file timely. If you wait too long, you may be foreclosed from doing that. But legal counsel can guide you and all that stuff. But that's just another example of how states are attacking this insurance crisis that's going on out there.
Okay, so act fast if you have some damage is done too. So okay.
Yeah, get respected professionals who know what they're doing. Just a call out, by the way, if you're dealing with a community association, get a professional that practices in community associations. Do not go to a bank that doesn't bank with community associations, that doesn't have a division dedicated to community association, that can't list off 100 or 1,000 clients that deal with this industry. Don't go to a contractor that's never done work on a condo. Don't go to a roofer that hasn't done it. Don't go to an attorney that doesn't practice in this space. The laws and the activities within this industry are very, very unique, and there are some tremendous professionals no matter what you're looking at within this industry. Just go to an industry professional.
Right. Yeah. Same way if you need accounting services, right?
Exactly, if you need accounting.
I'm keep plugging for you, Vishnu. So I don't know what this one means, but you're probably going to know. Is there, well, yes, there will be a recording, sorry. Is there a moratorium on, to do the SIRS in Florida due to lack of engineers?
No. So SIRS is the Structural Integrity Reserve. The 2022 condo law, safety law that was passed, required a structural integrity reserve study to be completed by December 31st, 2024. There has been nothing that we've seen from the state or the Division of Condominiums that has extended that deadline. So that deadline expired 3 weeks ago. What I've heard is general guidance is that if you have not had one done as you're required to, which is a 3-story or larger or higher condominium that is 25 years or older, get with legal counsel on the exact guidelines there, by the way, but you need to get one done. And if you haven't had one done, hopefully you have at least contracted for one, paid a deposit, done something to show that you've made an attempt to get it done. Because if the state comes knocking and you have done nothing, haven't contracted, haven't paid a good faith deposit, and show that you've made the effort to comply, I don't know, but nothing's come up so far. By the way, for all of us in the state of Florida, please note our legislature meets 2 months a year, and it alternates. So right now it's going to be March, April of this year. and it alternates between January, February, and March and April. So next year it'll be January, February. So they're going to meet March, April of this year. So legislative session is coming up. Keep your ears out and listen for whatever comes. If you get a CAI, call any of the groups that are out there. If you get a legislative action request to participate, to let your voice be heard, please do so. Please respond. Please reach out to your legislature directly, because your legislator listens to what owners say. CAI, the FICPA, the Bar Association, they can push for whatever they want to push, but the influence of 10 owners that are writing to their congressman or woman or their legislator in the state of Florida at the House or Senate level, far more impactful to get action taken.
Definitely. Yep. Can't make change if you don't say anything, right?
Yep.
So a question that came in is just kind of a general question. Someone was asking that if when the Corporate Transparency Act, if it changes or updates are made, will Enumerate let you know? We have been sending out the day of emails, notifications, as long as you're in our marketing and product news database. However, we really are just sharing what comes from the CIA website. They have a dedicated page that has updates. As soon as it happens, as soon as it changes, they update it immediately. That's where we're sourcing our news as well. So I would encourage you, if you haven't, to go on the CA site. It has tons of useful information on it, not just about the Corporate Transparency Act, but all kinds of great blogs and articles and webinars to learn, even get credits. So we will be sending out notifications, but if you're not in our system or in our marketing system, you won't receive them. So I would urge you to use the CAI website as your point of reference, but we will also communicate as well.
Sure. Any number of law firms, by the way, depending on who your law firm is, you need to sign up for their newsletters. They are great at communicating this stuff as it happens. And some of it just happens so fast. I mean, literally, we got the notice one day that said that it was suspended, and then 5 days later it was unsuspended, and then 3 days later it was suspended again. So, I mean, it really does change very, very quickly. You can also, by the way, go to FinCEN's website, FinCEN, which is as I said, financial crimes for the U.S. Treasury Department. They have a website on BOI that you can go to, and they'll give you the latest updated information as well.
Exactly. Okay. Kind of a specific one. Does road graders, are they included in reserve studies?
Road graders, equipment.
Equipment, yes.
Yeah. So equipment's generally not, unless you choose to add it in there, and then it depends on the community that you're in. I would recommend getting with whoever your reserve specialist or your engineer is and ask. These reserve study laws are generally geared towards the physical structure of buildings. Equipment can be included if you choose to include the equipment as part of it. Normally, the equipment that's included are the equipment that's physically attached to the building that's necessary for the maintenance of the building itself.
Okay. I think that's about it. Anthony, I see your secondary question. I will answer that for you and get you a link out to that main site. We also include that in our marketing letters and newsletters, but I'll get it to you directly. Vishnu, thank you very much for attending today and answering all these great questions. Once again, if you guys need any help or assistance for accounting and bookkeeping for your communities, Vishnu is right there ready for you in Florida, and he is set with a team of experts that have been working in this industry for decades. And just as he said, if you want an expert in your field, in the field of community management, you go to people who specialize in it, which is him and his team. So feel free to use this email and give us a shout out, or you can give us a call to one of our 800 number, and we'll get you connected to Vishnu and his team and get you your book squared away. But with that, Vishnu, I'm going to let you go, and we'll see you next time. I think we've got another one coming up with you probably next month, so we can't get enough of you.
Thanks so much, Adam. I appreciate it. Everybody have a great rest of your day and rest of your week.
All right, thank you, everyone.